The other important book of prime entry is what is known as cash book. A cash book basically has all entries where money is received or paid out either in the premises or in the bank. So we have a situation where all money received in the premises by way of check or coins or notes are recorded in the cash book. Also all bank transactions that happen in various bank accounts of a business, or also these could be checks deposited or bank transferred, wire transfers that are made from one account to another, electronic transfer that are becoming very popular now. Then it could be standing orders where you have told the bank to pay a certain amount every month or every year to some party. Then any charges that the bank charges you for interest or other services that they offer you, all those which are recorded are also recorded in the cash book. So cash book essentially all receipts and payments by way of checks, by way of actual currency and other bank related transactions are captured in the cash book. Let's look at an example of a cash book where we have amounts mentioned here. We have a starting balance, that means our cash book has an initial balance of 2 lakhs, that is cash in hand plus bank on a combined basis has a 2 lakh balance. Now we have received on 7 January a 20,000 rupees from Riaz and Company, so it will go into the receipt side of the cash book. A cash sales has happened, which means you have received cash of 1 lakh rupees, so that is again a receipt side, so it will go on the receipt side of the cash book. We will look at the format little later once you have completed this. You have paid Malik and Sons, maybe you have purchased something from them, you have paid them 5,000 rupees, so there is a outflow of cash. Purchased goods for cash, again an outflow of cash. Received from Satish, maybe a debtor, a customer who's paid you, again inflow of cash. Paid Harry and Sons, outflow of cash. You bought furniture for cash, again outflow of cash. You have paid rent, outflow of cash. So let's look at all the receipts, and usually a cash book will have a receipt side and a payment side by side, but for our convenience of presentation we have taken both separately. This is only the receipt side where we have said what is the balance that was brought down, meaning the opening balance, the cash already in hand and bank, and then what are the various receipts we had, 20,000, 1 lakh and 5,000. The total receipts are now 3 lakh 25,000 as per this example. Then we go to the payment side of the cash book where you say these are the various payments that we made, and if you see these are the payments recorded here. Now we know that 325 was the total receipt we had, and we have total payments of this amount. The balance amount is at the end of the month carried forward or brought down and taken as the opening balance for the next month, which is in this case this is a balancing amount which says if I add this, this is the amount that I carry forward, so that both the sides, the receipt side and the payment side at the end of the month are matching. So this is broadly how a cash book is maintained. Apart from the normal cash transactions that happen, many sales offices and branch offices of businesses tend to carry small amounts of cash, because bank transaction and large cash amount transaction you cannot give authorization to all levels of staff to deal with. So normally you put a certain amount and say that every time that get exhausted you can get it, so refunded. So what happens is in branches you need for travel, courier, and such other small requirements, you have cash requirements which needs to be done, and every time you cannot go to your head office and ask for. So the certain amount is already kept with them. So there are these payments. Then sometimes what will happen in a branch office, if you have a photocopier or a fax machine, somebody may come and use your facility for which you may take some payment. These are all small payments. So such small inflows and outflows which happen are done in essentially in branch and sales offices of smaller offices of the business, and these are known as petty cash balances that are kept. But it does not mean that that cash can be used like anything. There normally businesses have policy of what items can go into petty cash, and you also need to authorize and have a supporting claim. That means the person need to make a request, put a claim, a bill where how this money was spent, and then make a claim for that amount. That is the normal procedure that is followed. So how does a petty cash book look like? Essentially we are looking at example here where we had an initial balance on 1st April of 5,000 rupees. It was the petty cash that was received in a branch office of a particular business, and during the day this was the amount spent on tea, on courier, on some auto charges and cleaning charges, amounting to about 900 odd rupees, and the balance 5,000 minus this total was the end of the day balance, that is about 4,025 rupees was remaining. So 975 rupees was actually spent during the day. Now this balance then will be carried forward to the next day as opening balance. Now that is how the petty cash works. Now there is something called an impressed system. What it means is a branch office is always supposed to maintain a certain balance. It should be there with them, and if the balance falls below that, immediately the head office normally sends money from the bank to them to top it up. Now that sort of a thing is known as the impressed system, where the cash held as petty cash plus the voucher or the payments that have been made for various expenses should add up to the amount, impressed amount or the float amount that has been decided as a policy. So the total float amount is made up regularly. In this case, in example, if the 5,000 is the float, at any point in time a branch should have 5,000 as balance by means of cash payment. This topping up happens from time to time, and this is called as the impressed system of petty cash. So broadly we have looked at how the recording system of this is the first level at which the transactions that happen in a business are recorded, the various types of books that are maintained, the books of prime entry that are maintained essentially, and the vouchers, the basic documents, the source documents from where the transactions are recorded, and how those are moved on to the books of the prime entry we have seen. There is one area that we have not seen yet within the recording process, which is journal entries, which we will see as a part of a later session.